Hey traders, happy Sunday and welcome back to another Sunday video where we get prepped for the week ahead. In these videos, we take a look at everything from indices and commodities, currencies, bonds. We really talk a little bit about all markets, and that's just the way I like it. I'll tell you why. I think that a true person who wants to employ fundamental analysis in their trading, which is something that we really hone in on this channel, uses not just one chart, but rather many to get a full understanding of the market. So today we're going to be taking a look at everything. We're going to look at gold and silver. We'll look at indices. We'll look at so much more. So let's go ahead and jump right into it. I do want to just mention really quick where I'm at personally for the year. I do these on most of my Sunday videos where I just kind of give you guys an update P&L wise and how things are going. This year has been really good for me. Not my best year ever. We are up currently about 13.5% on the year-to-date chart. And if we take a look longer than that on the 1 year or the all-time, here is the return of the account that I have been publicly sharing on YouTube for some time now. And the reason I do that, I show that for a number of reasons. One of the biggest reasons is just because I want you to know that if you're watching my videos and you're learning from my videos, I want you to know that, I actually do this stuff and I show, my real track record and performance, so that people they know they're not wasting their time trying to learn something. So I hope you appreciate it. If you do and you like these sorts of videos, without further ado, let's jump in, hit that thumbs up button, and let's take a look at some charts. So I want to take a look at the dollar index to start out this week and just talk a little bit about what we saw this past week. It was a really, big week. Now the week ahead, I get a little bit of, there's kind of a joke on my channel. It's like, Nick, you always say every week is about to be a big week. And this upcoming week, admittedly, is actually not that huge of a week. That being said, there is no shortage of market data that has come in the last week for us to digest. Last week was a home run for the dollar bears. Let me break this down a little bit for you. So if we just make some room for a second, what caused this big slide in the USD? Well, there's a couple things. The big obvious one that everyone knows is CPI, right? The Consumer Price Index really came down. We really saw a significant CPI improvement. In fact, let me just show you that because this is going to set the stage for the rest of this video. Really is this progress we've made in inflation is the basis for a lot of my trades currently. So we see this nice downward trend in inflation starting to rekindle. We saw this over here for some time. It then went sideways, and we now have the potential for a nice downtrend in inflation to come back into the picture. Why does this matter? And why is this bearish for the dollar? Well, it matters because the Fed now might have the opportunity to look to cut interest rates this year. There was questions as to whether or not they would be able to. It is now pretty confident by the market standards that the Fed funds rate is going to get cut likely in September and possibly again a second time before the end of the year. So when we go through that and we say, okay, interest rate cuts probabilities did rise, remember that rate cuts are, generally speaking, more bearish for a currency because it makes foreign investment a little less attractive. And so we see the dollar's reaction to this light inflation print. Remember, cooling inflation makes it so that the Fed can cut rates more easily, and they're more likely to do so. And so the dollar sold off. Now, from a technical perspective, with all those fundamentals out of the way for a second, what we see is price came all the way down to a key level of support at that 104 level. And I will say this, I don't know, if we see just a clean break through this low or if we bounce first, but my view would be if you see the break of 104, that is a very nice continuation signal on the dollar bearish side. That is what I'm personally looking for, and I am already positioned in several things that benefit from a weakening dollar. And this past month, as I showed you just a second ago with my P&L, has been really, really good. We've really just, hit it out of the park with some of the trades recently. And that is certainly not always the case. And I just want to make a quick membership shout out. Now, pause for a second. we are going to be doing, and this is something, I'm letting you in on a little bit of a secret. If you're somebody who's been thinking about getting a membership with us, stay tuned this week. Just look out for some discounts. I can't mention any more just yet, but just know if you're somebody who's been thinking about getting a membership with us, if you want to come trade with us and get signals from us, you can see all the trades that I'm taking, myself and Frank, as you just saw on the screen. We share all of our trades and notify everybody what we're doing in the markets with full breakdowns, explanations. We have strategy guides and all sorts of stuff in the group. Stay tuned on that. We get some really good discounts coming this week. So you get a chance to try it for a full month for like a super low price. Just stay tuned and we'll have information. If you'd like to join for the updates on that, you can do so by joining our Telegram and or Discord channel, which will be linked in the description down below. We'll be dropping that information there for you if that's something you're interested in. So we take a look at the dollar. We say, okay, dollar is at support. Does that mean we buy? Well, in my view, no. The fundamental analysis here is still bearish. If we go over to the top setups page, what we can see here is if we highlight just the major currency pairs for a moment, most things here are pointing to dollar bullishness. So I'm sorry, dollar bearishness. Let me explain. If we take a look at euro dollar and Aussie dollar and pound dollar, you can see that these three currencies are getting bullish readings relative against the dollar. And then on the other side, the US dollar and USD Swiss and the USD JPY are both getting bearish readings, basically favoring the alternative currency over the US dollar. So for currency traders out there, this dollar weakness, in my opinion, is set to continue. I don't think that this is the end of it, but I think we may see a bit of a stalling out as we hit this key level of support. That being said, if we do see the break underneath this, I'm looking for continuations lower. Like I mentioned, I have many trades open right now, and the reason I'm not closing them just because we're hitting support is because I believe that there is room for the dollar index to go down further. Let's talk about some of those trades. I am currently long gold. I've talked about this for several weeks. It's been the kind of main, talking point on my channel, if you will, for the last few weeks. A lot of people have been keeping up with my gold idea and my trade here, which initially went terribly wrong. So my entry was here, just really not a great entry, but support ended up holding. That was why my stop loss was here. And that actually ended up being the right call to just hold through that little bit of a drawdown period. And now gold is making a really nice move higher. We've got higher lows, higher highs, and I've trailed my stop loss into profit here. As you can see, that is where my stop is at. So, as long as we continue to make gains, that's going to look like a overall bullish thing. Another thing that's just a side note is some of you guys might have seen or heard the news that there was a attempt at the former President Trump's life during one of his rallies. I believe it was in Pennsylvania or something. Someone actually took shots at the former president, and this just adds another level of uncertainty, concern, and fear in the election cycle. I mean, people, that is sort of a scary thing. And I will say my comment on that is just that I don't believe, whether it was Biden, Trump, anybody, I never think that violence like that is the answer. I don't care how much you dislike or like someone, either, candidate, I would say the same thing for. I think that's terrible. And I hope that, I'm a big proponent of peace when it comes to that stuff. But in terms of a market reaction, the market is not open at the time of recording this, but I do imagine that this continued pressure on the political side in the US and abroad will continue to be a positive thing for gold, right? Uncertainty typically is a positive thing for gold. And what we don't know can sometimes make rumors and concerns and escalation continue to make gold look attractive. So that's one reason, but it's not the only reason. There's also the very obvious interest rate cut expectations rising this past week. So I mentioned I'm still in my dollar kind of bearish biases. So I am long gold. I'm also long TLT, which is a bond ETF, a long duration ETF that holds like 20 plus year treasury bonds. And this one's moving nicely for me as well. So I'm really positioned. I'm also long silver. So when we talk about metals, I'm bullish on metals, which is kind of a proxy for bearishness on the US dollar. Not always, but generally speaking, I think that there's upside for metals. And part of the reason I think so is because I think that the dollar has potential weakness as it lines up with its peers for interest rate cuts this year. That's been my heavy kind of forecast, if you will, based on the fundamentals in the last few months, and it's playing out really well so far. We'll see if it continues. The last one I have that's a current position of mine that I keep talking about is I have exposure to the technology sector through the ETF XLK. Now, XLK, I am long on this position. I've been in longs for some time since the dip in April. So this is more of a trade that has just kept going in my favor, but it is really, very similar to just trading the NASDAQ. XLK is just more tech heavy, obviously is a tech sector ETF, but it is really just a play on the NASDAQ. The NASDAQ still looks good to me. As much as people kind of have been calling for now a big rotation. And if you don't know what rotation is, let me explain this pretty easily. So within the S&P 500 or the NASDAQ, there are big companies and there are smaller ones and lots of little ones, all different sizes within the index. Now, the trade for the last year or two has been really all the money going into the big ones, right? Stay with the big, stable, safe guys. Well, with rate cuts on the horizon, many people are now saying, oh, now we want to get into some of the other areas of the market. They want to buy the Caterpillars and the John Deeres and the Delta Airlines and Wynn Resorts. We want to buy all these other smaller companies. And I know this may not be super relevant to a lot of traders who don't trade sectors or ETFs or individual stocks, but understand this is important if you're an index trader. The big stocks got sold recently here. You can see on this big candle on CPI day actually took a beating, the NASDAQ did. And many people were confused by that because it was like, well, we had great inflation numbers. Why is the index down? Well, if you take a look at XPY, this is the S&P 500, you can see there was a big candle to the downside on CPI day. But if we take a look at RSP, and I've made this point a couple of times, so if you've seen it before, forgive me. The RSP is an equal weighted ETF that holds all 500 stocks in the S&P 500, but applies an equal weighting to each one. So unlike the, when I showed you the different company sizes, the S&P 500 has heavy weighting for the biggest companies. That one got sold, but the RSP actually moved up. Most stocks loved the CPI report coming in soft, coming in showing inflation's cooling. So they rallied. The average stock actually rallied, and not the mega tech, but the average stock. I personally, here's my thing. A lot of people are wondering, is it time to get lighter on technology, sell tech, and go into the S&P 500, go into the Dow Jones, get into value plays? Is that the move now? And in my opinion, the answer is no. I'm still very bullish on technology. I think rate cuts are good for technology. I don't think many people would dispute that. That is very standard, traditional. Markets 101 is rate cuts make borrowing cheaper, which is great for innovative companies that are in the tech world. So I still like the NASDAQ. I'm still bullish on the NASDAQ. I'm still in the NASDAQ. I have, long positions on the technology sector, like I mentioned. So do I think that this is going to be some huge, cannibalizing rally where it eats all into the heavy tech stuff and just goes into the Russell and small companies? No, I think that, if you're going to see a continued market rally, you still want to see the leaders lead. And the leaders have been the Apples, the Microsofts, the Nvidias, the maybe even Teslas now. So that's my thoughts on the index. I'm still bullish, looking for pullbacks. Any kind of major dips, I'm a buyer. Until that trade no longer works, that is where I'm at with it. So we'll see where that one takes us. Anyways, let's keep going and take a look at some other setups here on the Edge Finder for a moment. I mentioned the big drop off in the the bearish reading on the yen, that we had a huge drop off recently in that. Let's take a look at the dollar yen, which did pull back and nailed a level of support here on Friday. A lot of people wondering, is this going to bottom out quickly and continue higher or move lower from here? Is it going to break support? Well, here's the thing. On Friday, it did not close below decisively this key level of support here. I would say that you've still got, clearly buyers at least holding it steady where it's at. I have a hard time being bullish on the yen, and I'm also having a hard time being bullish on the dollar. So this is not a trade I'm going to partake in. However, the dollar, if it does continue to weaken and perhaps the Japanese story for growth actually improves, if that happens, then maybe I start looking for shorts. But right now, the story for growth in Japan is not very convincing, in my personal opinion. And just to add some context, when I tell you, oh, the growth in Japan, what does that mean? Like, what the heck, Nick? How that you can't just say those things out of the top of your head and not explain. So that's why we're going to show you some data. So if we take a look at the Japanese GDP growth, this is what I mean by it's not very impressive. It's not very convincing. GDP figures out of Japan are not very robust. They're not very exciting. We're seeing decline in the economy there. I don't have this data in front of us, but I know also that they struggle with, and I mention this often, population decline. That's not good for GDP, friends. And then you take a look at like the US, like this is growth. This is steady, strong growth. Has it, materially weakened recently with rates being higher, for a suspended period of time? Yes, but again, I still prefer positive growth, trying to be a buyer of that currency or stocks in that economy kind of thing, than trying to buy into something that is, just struggling. So when it comes to Japan, I can't really justify getting super long the yen, and I don't see a global recession coming right now. So I don't have a story to really get on I'm going to short dollar yen. I'm going to basically go long the yen, which is an economy that is really struggling relative to its peers. That's my perspective. That's my opinion. So I don't have a bias on this one. If I did want to trade the yen, it would probably be bearish yen on something like the Australian dollar against the Japanese yen. I'd probably be looking, if I was trading this one, and it's not on the edge finder, I don't think. No, it's not on the edge finder. Aussie yen is getting a +2. But something that I would get a little bit more excited about would be, maybe a euro yen, maybe an Aussie yen, just not the dollar yen at this time, as I am bearish on the dollar specifically. So just wanted to throw that out there. We are also still getting bullish readings on things like the NASDAQ, gold, the Australian dollar, etc. And let's now just take a quick look while we're speaking on it at the commitment of traders data, just to see what the week over week filing is. The Swiss franc continues to be super shorted by institutional money. Same thing with the Canadian dollar, same thing with the Japanese yen, the Russell, and 10-year treasury bonds. Then you flip things around and you say, well, look, gold is still super bullish. US oil, silver, pound, kiwi, dollar. These things are the most bullish by institutional investors / traders on the hedge fund side. On a week over week basis, they bought the Nikkei, which I thought was interesting, the Australian dollar, the pound, the euro, silver, and JPY. On the flip side here, you have them selling NZD, SPX, platinum, NASDAQ, Swiss franc, gold, US 10-year treasury bonds. Very interesting. So, seeing some gold selling for the first time in a minute has been interesting, especially when gold has been rising. So we'll keep an eye on that. That is a little bit of a concern. And you'll notice that if we, take a look here at the commitment of traders data, which was a very positive reading previously for gold, is now getting a 0. It's getting a mixed. Why is the commitment of traders scoring on the edge finder not getting a negative, since we just saw that they sold some? Well, here's how the edge finder's algorithm works. It looks at both the net positioning as well as the week over week filing. Maybe they sold on the week over week filing, but the institutional money is still very, very net long on gold. So we have to factor that in, and we get a +0. So we get a mixed report for the commitment of traders data for gold. You can use this if you are not already an edge finder user. You can try it for 30 days if that's something you're interested in. There will be information down below in the description for you to try the tool out. It is a remarkable software, if I say so myself, considering me and my team built this and we sell it. So take it with a grain of salt, but genuinely, it's a really, really good product for people who are looking to get involved on the fundamental side, who want to track more data and not spend 6,000 hours a week reading articles in order to understand stuff. So if you'd like a copy of the Edge Finder, you get 30 days, or you can just purchase it using the link in the description down below. There's information there for you to get a nice discount as a subscriber. So there you go. That's all I've got for you guys this week. A little bit of my thoughts going into this upcoming week. Let me know what you're trading, what you're watching in the description down below. Thank you guys very much for watching. Trade safe, and we'll see you next week, or not next week. Next time, we'll see you Monday. See you guys.